Almost every country in the world have a stock market. That indicates how important this particular institution is, because the stock market is tied to the economy, and the economy is equally tied to the performance of the stock market. So I want to discuss 14 importance of the stock market. Number one, capital formation. Our companies come to the market from time to time to raise capital for their operation. They want to expand, they want to invest in them R&D, they want to, expand their market shares or their geographical coverage, as it relates to their product and operation and services. They come to the market to raise, such funds. Number two, investment opportunities. The stock market presents investment opportunities to both individuals and institutional investors alike. And so investors will come to the markets to buy shares with the hope of selling them when they appreciate. This is a very important, attribute to the market that I want everybody to key into. Study the market, understand the market, learn about the market. And when you fully understand the market, then of course you are ready to partake in the economic benefits the market, is designed to produce. Number three, liquidity. The market provides liquidity to investors in the sense that you can very easily buy shares and you can also very easily sell them. The process is almost seamless and it's not burdensome, it's hitch-free. Sometimes you may just need an apps in your phone, or maybe you could use a desktop to key into the market through your broker. You can place a buy order, you can place a sell order at any point in time, and then it will be executed on your behalf and your fund will be transferred into your account. So it's highly liquid, unlike other assets like real estate. The stock market provides decent level of liquidity. Number four, wealth creation. You want to create wealth either for yourself or you want to create a kind of generational wealth. The stock market is there for you. Simply find highly established, reputable, large blue chip companies and other related companies that are safe and sound. Then you buy those companies. Hopefully, you could grow and compound your wealth over time. And before you understand what is happening, you discover that you have enough not only for yourself, even for your coming generation. Number 15, economic efficiency. Generally, because the market is there for companies to raise funds, and this fund they are raising, this capital they are raising is provided at a 0% interest rate, and by so doing, corporations and companies and businesses, have a kind of free fund they're operating without that burden of incurring debt from the bank. And because corporations are having less debt burden on them, then of course they will have a better profitability, and with this heightened and enhanced profitability, the economy itself will do well and of course will operate efficiently. Number 6, price discovery. Usually a company on its own may not really understand its value. But once a company is listed in the market, buyers and sellers, market participants, they come together to bid, on the shares of these companies. And so the market itself is like a very giant auction, house, where people come to bid, over shares of the company. And this bidding process at the end of the day would establish the actual price, the actual value of the company that is listed in the stock market. So it helps in price discovery. It fixes the value. It sets the price for the stock of any given listed company. Number 7, risk diversification. When you invest in the market, there's a particular freedom of diversifying your investment across industries and across sectors and sometimes even across geographical boundaries. All right. And so the market itself, the stock market provides an opportunity for you to diversify your risk across different sectors and industries and segments of the market. and equally help you diversify your investments away from other asset class, other asset classes as the case may be. Number 8, corporate governance. When it comes to corporate governance, every listed company in the market is expected to follow strict rules that are enforced by the Securities and Exchange Commission. These rules are designed to enforce transparency, disclosure, in the operation of companies that are listed in the market. And so, by so doing, investors have the confidence that yes, their investments are well regulated and that are in safe hands, because the government gets involved and they get to regulate, they get to monitor the activities of these companies that are listed in the market, and that by so doing, enforces strict corporate governance on the part of listed companies. Number 8, economic growth. The importance is that the economy essentially is tied to the performance of the stock market. And the stock market equally, mirrors the activities, in the economy. And of course, each of them reflects the movements, the growth, the activities, the advancement of one another. And so, this particular attribute is very, very important. The stock market encourages economic growth. When the market is doing very well, the economy will equally perform well as a result. Number 10, consumer confidence. For the fact that the market is doing very, very well, discover that participants in the market will become like rich probably all of a sudden when the market does very well. In the typical bull market, discover that people make it very well. They make it very well in the market. And so as they withdraw their funds from the market, they can very easily buy what they want to buy. They have enough discretionary income to spend and to buy things that are of importance to them. You see, and so it by so doing, gives them the confidence to go out and spend as they feel like spending. That's a very key attribute. That's an important attribute of the market. It reinforces or it produces, consumer confidence. Number 11, retirement planning. When it comes to retirement planning, you discover that a portion of our retirement savings are usually invested in the stock market. Apart from other asset classes, these funds are invested in, a large percentage goes to the stock market because of the potentials in growth and appreciation the market provides over time. You discover that if you are fully invested in the market, when you retire and your investment does very well, you have a comfortable and of course an enjoyable retirement at the end of your working life. So it's a very, very key, it's an important avenue, when it comes to retirement planning. Please, I want you to subscribe to this channel, hit the notification button and give me a thumbs up. I want to be encouraged to keep on bringing you content of this nature that is designed to help you to become a better investor. Number 12, entrepreneurship. The stock market encourages entrepreneurs. They come in, they raise funds, particularly, startup companies and new individuals who are just coming up, as entrepreneurs. It encourages them by giving them, free capital. They come in, they raise money virtually free of charge. And as they do well, in this process, you discover that the entire economy, the entire system will benefit from, the progress, these entrepreneurs are making, financially. And then number 13, global integration. Normally, investors in the stock markets, they interact at a global level. They interact, they share information, they brainstorm together, they research companies of other countries, and all these activities tend to bring them together and encourage global integration both at the individual level and also at a country at a country or at an economic level as well. And then lastly, number 14, economic indicators. I told us earlier, the stock market is like a barometer. It measures the pulse of the economy. When the stock market does very, very well, essentially, all things being equal, the economy will equally perform very well. It reflects the economy reflects the performance of the stock market and vice versa. You want to look at a vibrant economy, you would certainly equally come across a vibrant stock market, because the two of them, the two institutions, though separate, they tend to work hand in hand. So if you learn about the importance of the stock market, not just learn about its importance, I want you to be involved in the market. Personally speaking, by the grace of God, I've been in the market for the past 18 years, and I really, really enjoy investing, despite the risk, involved. I've gotten used to it, and I enjoy investing as an individual. I want you also to key into this particular opportunity and enjoy this avenue of wealth creation as well.